Good morning, everyone. This is T3 Live Editor-in-Chief John Darsie here to bring you the morning call. Sorry for the late start. The market is already open, so we're doing this a little bit delayed, but it'll be a good exercise to see a little bit. We'll talk about some of the ideas we talked about in the morning note, some recent ideas we talked about in Off the Charts, and see how they're playing out so far this morning on a Friday. We'll go ahead and take a look at the chart of the S&P to get right into the action. We opened about 3 handles higher this morning. Obviously, the big news yesterday was Janet Yellen's confirmation hearing as the new Fed chairman. And she struck a very dovish tone. The confirmation itself went off very smoothly. It seems like a formality that she's going to be appointed as the new Fed chairman, but she did strike a very dovish tone. You know, she did say things like QE can't go on forever, QE can't continue indefinitely, but she did say that perhaps the Fed could do more to support the economic recovery. And she talked to like Ben Bernanke did about how the Fed has sort of been fighting headwinds from faulty fiscal policy. So they sort of see it as their mission to try to pick up the slack where our government is not doing what they could to support a recovery. So she said a lot of things that make you believe that she doesn't have an eye on QE tapering, and even perhaps she has an eye on expanding QE in the future based on some of her comments yesterday. So what that's doing is that's sort of flipping a narrative on its head that started, you know, this summer through when everyone thought they were going to taper in September. And then there have been some whispers recently because of strong jobs report, because of strong GDP number about potential tapering. But I think her comments yesterday are going to quiet that conversation a little bit and get us back in that narrative of, you know, rates are going to stay low. You're going to see certain sectors, certain assets perform well in that low interest rate environment. And an example of that is emerging markets. Emerging markets are the ones that benefit most directly from dovish monetary policy from the United States. Yes, a lot of things benefit, but emerging markets are something that'll be very interesting to watch. Something that, you know, some of these ETFs we don't look at a lot here at T3, but I think it's interesting to do an analysis of them. And first we'll take a look at a chart of, we'll say, the Brazil ETF, EWZ. This is one that over the last few days, you know, with the Yellen news and her imminent appointment, has been very strong. You know, this is a group, the emerging markets have definitely weakened a lot this year and underperformed more established markets like U.S. markets and Japan and things like that. But a nice 3-day bounce for the EWZ back above its 8-day moving average. Just an example of an emerging market ETF that could definitely get some juice, you know, based on this news about Yellen's appointment as the new Fed chairman and her comments yesterday. India ETF, EPI, another example, nice 3-day move, big gap up this morning. I think, you know, people know that Janet Yellen is a dove, but they weren't sure exactly what type of tone she would strike and what her, you know, her initial tone would be in her first days sort of as Fed chairman. She's a de facto chairman right now, even though she's not technically chairman yet. But, you know, this is just another example of an emerging market ETF that I think will perform very well with her as Fed chairman, at least through next year, beginning of next year, first quarter of next year, as this dovish monetary policy continues. In the U.S. stock market, there are several sectors that benefit from a low interest rate environment. Those are the safe sectors, the defensive sectors, because people are always searching for yield. And, you know, the 3% dividend yield, 3-4% dividend yield that you get from things like utilities, like consumer staples, those are really attractive in a low bond yield, low interest rate environment. And so the XLU, you take a look at the chart, is an example of one of those sectors that's notorious for having high dividend yields and weakened when the conversation started about QE tapering. That started, you know, back around April, May. That concept sort of got coined, and people were expecting a potential taper, you know, August, September. September was the one that everyone really was anticipating. But then we got that surprise announcement when they didn't taper. But people expected, you know, they didn't taper in September, maybe they'll taper in October, December, or, you know, even perhaps early 2014. But I think now, based on Yellen's comments yesterday, I think people are a little bit even skeptical about, you know, when that tapering will start. It'll depend very heavily on the data, I think, but I think the XLU is an example of a sector that is going to perform very well with Yellen as Fed chairman. So obviously you've seen the last 2 days it's shown relative strength. Today it opened down a little bit, but has already gone positive. So I think you could definitely see it test this pivot high here around 39.61, and then beyond. The bigger pivot from July is 39.81. So those are levels to watch. I think you could see the XLU in the 40s relatively soon. XHB is another example of home builders. The home builders, as you can see, just like the emerging market ETFs, just like the XLU, the utilities, the home builders have shown relative strength the last 2 days leading up to that Yellen confirmation hearing and in anticipation of her being the new Fed chairman. So you have, just like sort of you had on the XLU, you have a pivot high here around 31.40, and you have it breaking a downtrend. We can go ahead and draw the line. An example of an entry, I think this is a great entry on the XHB, a sector that has lagged for significant parts of this year. Something to watch. And gold is an example of something that, as we've said time and time again, there have been certain announcements, the delaying of QE tapering, things like that, that should have ignited gold. It should have helped gold get back on track and get some mojo back. But those announcements, any benefit that gold has gotten from those announcements has been very short-lived. And so what do we see yesterday? Obviously, Yellen striking a very dovish tone. You see gold gapping up as QE might continue longer than people think. But wasn't able to close on its highs of the day, put in a tail this morning, opened flat to slightly lower, getting no juice today. Not a good sign for gold. The news and the headlines would seem to indicate that gold could get going again, like I said. But when headlines indicate something should get going and then it doesn't, that's a major red flag and a major sign that if the news is positive for the asset and it doesn't get going, then that tells you if news starts to go bad for the asset, it could go down pretty sharply. So this is something that you zoom out on gold to get even more of a picture of it. You see where it came from. And gold, obviously, some people called it a bubble. Some people said it was a little bit of a ludicrous rally. And some people say this is a buyable dip. But gold is a very controversial type asset. But you can see where it came from. So it's not unfathomable to see it come back, retest this pivot low around 114.68. And then obviously you have a lot more room to the left on the chart from where gold came from. But it'll be interesting to watch. This is something that gold is difficult to trade. Some people try to trade it like a stock. It's not like a stock. You shouldn't treat it like a stock. But it's something that'll be interesting to watch on a swing basis. Some people like to have exposure to something a little bit different, to protect themselves from future inflation type worries and stuff like that, even though inflation has remained very muted. But gold is something interesting to note the last 2 days. It's something that's always in the news when the Fed is making headlines. To switch gears a little bit, I'll talk about a few stocks that were in the news last night that we talked about in Scott's morning note this morning that could be in play today. And obviously the market's already open, so we can see how those are trading so far. JCPenney. JCPenney is one that finally found some friends down here in a $6 and change area. They had that big secondary offering around here where inundated supply for the stock led to a big decline. A lot of people are talking about bankruptcy. The opinion got very, very negative, and when opinion gets very sort of consensus on one side of the argument, then that's when sometimes you can look for a bounce. And that's what I think some people did, and obviously some big names did, because last night we got news that David Tepper, the big hedge fund manager at Appaloosa, announced that he's built a large stake in JCPenney, or a decent stake in JCPenney recently, which probably helped it bounce here, as he obviously plays with a lot of size. So I said this morning in the morning note we could see a potential squeeze in JCPenney today, and it did open higher. It opened last time I checked around 1.5%, but this morning it had an initial surge and has actually pulled off a little bit. We can take a look at the 60-minute chart to get a better picture of it if it'll load for me. There we go. And as you can see, we had a real nice push above the $9 area, which is a target area that Scott has been talking about in JCPenney. He's been involved in the stock. But then we have a little bit of a tail in the 60-minute, so it'll be interesting to see what that tail leads to. And I think anybody involved with JCPenney today will be obviously watching very closely to see whether it closes positive or whether this news maybe marks a little bit of a short-term top in the stock. But it's one that is heavily shorted, and I think it definitely could squeeze a little bit more. I mean, you obviously look where it came from. It has some room up here. Another natural target after the $9 area would be 967, the high of this candle here. But just something to keep an eye on. And then the other news last night, David Tepper also announced, it was also announced that David Tepper and Leon Cooperman of Omega Advisors, two huge hedge fund managers well respected on the street, announced that they had taken stakes in Freeport-McMoRan, which is a gold and copper miner. The basic materials have been a sector that had been really weak, out of play, with commodities being weak, obviously. But a lot of these stocks have found some friends, found some footing, and actually made really nice percentage moves if you were playing the contrarian side of things. As you can see, Freeport was, back in June, it was all the way down here. The low was 26.37. Put in a nice uptrend since then, come all the way up above 38. Then that news today is helping it continue higher, back above the 821 day after a brief pullback from the highs in late October. Then other names, you talk about sympathy plays. The basic material sector seems to be getting more love. Yes, the direct investment was in Freeport. You also look at U.S. Steel. Chart looks really good to me. Similar type pattern. We were struggling down here in the teens. Now we're up in the high 20s. That's a really big percentage move. Finding those bottoms is not easy, but if you use risk management, calculated tactics, you can find some really good trades like that. X, looks like it could break out. And then Cliff, CLF, is one that I've talked about and been involved with. As if you follow me on Twitter on the VTF or watch my videos on T3 Live, you've heard me talk about Cliff. Cliff is another one that has about a 30% short interest, so very heavily shorted, potential for short squeezes. It's one that has also improved. We go back to the weekly chart on this one as well. It was all the way down towards 15, has bounced all the way, almost a double at its highs after earnings. The high was 28.98. And today it's getting a little bit of a boost, a sympathy play from FCX, like I talked about in the morning note. So the basic material sector is one to watch. And then moving on to some setups we talked about in Off the Charts on Wednesday night. Some really good setups that we offered. You know, obviously we like to be trend traders, trend analysts. We don't like to take contrarian views all the time. Every once in a while a contrarian trade idea will come on the table, and you can use tight risk management, tight stops to get involved with some of those contrarian type trades. But all in all, we like to be trend followers, and that's what we've been doing on Off the Charts. We've definitely shied away from offering too many short ideas. We'll sprinkle one in here and there, but because we've been following the long side, we've been able to unearth some really nice trade setups and really clean setups that have worked out really well. So on Wednesday night, one of the new ones we offered up, Western Digital. Western Digital has been weak this morning, but yesterday, huge percentage move, a breakout above our price point. The pattern we drew on Off the Charts was right here. And we got a really nice igniting move above that level, above the 8-day moving average. So really nice trade idea there. It is weak a little bit today, so definitely see how it closes to see how we treat this trade idea. But what we usually do, once a stock triggers, and if it triggers as impressively as it did yesterday, we'll move the stop up to break even or very close to break even to make sure that worst comes to worst. It's it's an idea that you took a shot. Maybe you trailed a little bit, trimmed a little bit on that big percentage move yesterday, and then maybe got stopped out of a little bit. If it does come down, obviously weak today, that's not a given that it's going to come all the way down into the breakout. We talked about Yahoo on Wednesday. Yahoo, really nice move. It was a great pattern here. We talked about it. It was talked about in the VTF, and some people got involved with it down here. Really nice move out of that sort of bull flag, you call it, after a big move. You go to the weekly chart, you can see it even better. The big catalyst for Yahoo has been their stake in Alibaba, which is the Chinese e-commerce site that's set to IPO. Everyone's very excited for that IPO. Obviously, China is a huge market. The leading e-commerce site in China is obviously going to get a lot of buzz on its IPO, probably even more buzzed about than Twitter in some ways. But you can see the nice bull flag in Yahoo, and then we've got a really nice igniting bar on the weekly chart off of that. But go back to the daily. We talked about it on a breakout as well. And today it's holding up well and continuing higher. So good to see that type of continuation. What's another one we talked about? Well, anyways, you can look at Off the Charts from last night. Maybe I'll share it on Twitter later this morning, and then in the recap we'll go over some more of those ideas to see how they close today. Because on a breakout, you definitely like to see continuation, commitment to the upside, and if you don't, you perhaps consider trimming, trailing, raising your stops, those types of things. But anyways, this has been John Darsie here for your late morning call. Again, sorry for the tardiness, but hopefully learned a thing or two, and we'll go back over some ideas in the daily recap. We'll continue to try to bring you great ideas, as always, on our Off the Charts newsletter and our morning note and Mark's trade idea of the week. So if you're not subscribed to any of those free newsletters, definitely get involved. And Off the Charts also, $30 a month for that product, $1 a day. Some really great ideas that, in my opinion, that newsletter pays for itself pretty quickly, can pay for itself pretty quickly. So definitely consider getting involved with that if you're part of our community. This has been John Darsie, your editor-in-chief, here for the morning call. We'll see you back here for the recap.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.